How's it going, everybody? My name is Greyson Roberts. I'm a buyer's listers agent with Boss Properties powered by Keller Williams.
I'm Kristy Weldon with Community Mortgage Brokers, and today we're going to help you bust some home buying myths. I've been a loan officer for the last 7 years. I recently got into mortgages a little over a year ago. My favorite part about the job is being able to get people pre-approved and into their dream home whenever they've never thought that they could.
So now let's get down to busting the top 10 home buying myths. And number one on our list is that you need a minimum of a 640 credit score to qualify.
That's not true. I've actually helped people get into a home with as little as a 500 credit score. You do need a little bit more cash down for that, but 640 is absolutely not the minimum.
Number two is that you need to be debt-free before applying for a loan.
Absolutely incorrect. You do not have to be debt-free. It is okay to have some debt on there, credit cards, car payments, things like that. You don't want late payments, but that's something I can look at as well. Before paying off all your credit card debt, definitely get with a lender, and we can take a look at that for you and see if that's something we can pay off at closing or if it's something we need to touch at all.
Perfect. Also, number three, 20% down is required for a home loan.
No, USDA is 0% down, FHA is 3.5% down, and conventional is as little as 3% down.
Now, number four, all lenders are the same.
No, not the exact same. We do offer a lot of similar products. However, you want to shop around. There's different rates available at different lenders, which can highly affect your pre-approval letter and what you're pre-approved for. So I do suggest shopping around. I'm actually a broker, so I have access to a ton of different financial institutions, which means I get wholesale rates. So I just pull your credit one time, and I'm able to see who can get the best rate and the best option for you. So I definitely suggest going that route. And we have multiple different programs as well. So things like the 4 regular, which is VA, USDA, FHA, and conventional, and then down payment assistance. We also have low credit, free credit repair, and then we also have something called a non-QM list of products, which we can go over at another time.
Perfect. Now, number five is that you must find a home before you actually apply for the loan.
No, so you definitely want to get pre-approved first because you don't know what your spending options are. You don't want to be shopping for a $700,000 home or something that's $50,000 whenever your range is much less or much more. So definitely get with a lender before you go look at the house that you want.
Perfect. And on number six is that you must get a 30-year fixed loan.
No, also incorrect. You can do a 15-year note. You can do a 20-year note. There's lots of different options out there.
Now, number seven is that it's actually cheaper to rent.
No, massive misconception. It's definitely cheaper to buy a home. That way you actually have an investment of your own and you're not paying a mortgage for somebody else plus interest to them. So that's 100% interest to somebody else whenever you could be purchasing a home. And I promise you, it's probably going to be about half of what you're going to pay if you were to rent.
Now, number eight, along the same lines, it's cheaper to buy a fixer-upper.
So that's a tricky question for your first time. If you do have the assets and you've got the knowledge on how to work with a fixer-upper, it could be a good option for you. If that's not something you've ever done, there can be a lot of money and a lot of knowledge and companies that you're going to have to hire to do that. So a lot of people buy that maybe as like a second option for an investment property.
Number nine is that it's better to wait until the market slows down.
No, you don't want to wait until the market slows down. I've actually had people do that got pre-approved, and then they found a house 6 months later. By that point, the interest rates had actually gone up, so their pre-approval amount had actually gone down, and that house was no longer available to them. So it's good to stay pre-approved. Keep your eye out for the house that you want because they're going really fast right now.
And number 10 is that when the offer is accepted, the deal is done.
No, so you definitely don't want to go ahead and assume that it's move-in ready at that point. We still need about a good month and a half, maybe a little less than a month, kind of depending on the loan product that you go with. But we have to get the inspection scheduled. We've got to get the appraisal done. We've got to get insurance set up with the title and everything. So we want to make sure that you are secure in your home. The value of the home is true, and we're setting you up for success before you get into that house and its closing day.
Thank you guys so much for watching, and I hope this really helped you learn something in your home buying adventure. Now, if you have any questions, please feel free to reach out to Kristy or myself.
If we don't have the knowledge, I promise that we'll get it for you. Thank you guys for tuning in. I hope you have a great day.